What if I told you the Australian stock market just pulled off a surprise comeback, one that even outperformed housing in several regions for the first time in years? It's been a volatile ride, but investors holding tight were just rewarded handsomely. While everyone's been focused on skyrocketing property prices, something big was quietly happening on the ASX. Today on Profit Powerhouse, we're breaking down the year's biggest financial twists: who won, who lagged, and what's coming next in 2025. Whether you're tracking stocks, real estate, or the broader Australian economy, you won't want to miss this detailed breakdown. It's the end of the financial year. June 30th is here, and that means it's time to wrap up the books and take stock of how the markets performed. This past year has been a roller coaster, especially for the ASX performance. Things got pretty bumpy during February, March, and April, with the market getting knocked around by uncertainty and shifting investor sentiment. But just when it looked like we might be in for a lackluster finish, the ASX climbed right back to where it started, those record highs we saw back in January. By the time the year closed out, the total return for the ASX, including dividends, landed at an impressive 13.2%. That's not just solid, it actually beat out last year's result of 11.6%, proving that patience in the market still pays off. Now, looking back at the 2023 to 2024 financial year, the share market was actually beaten by the housing market, which posted a total return of 12.2%. But that script flipped in the most recent 12 months. The latest numbers for 2024 to 2025 show that the national median house price delivered a more modest return of 7.1%. Interestingly, regional towns have been the standout performers here, outperforming the major cities. They've notched up a return of 10.1%, which is strong, but still just short of the ASX. When we dive into city-specific data, Darwin stands out with a 13% return, almost neck and neck with the stock market. Adelaide followed close behind at 12%, Perth at 11.6%, and Brisbane at 10.9%. But the traditional powerhouses Sydney, Canberra, and Melbourne didn't impress this year. All three recorded returns of less than 5%. That tells us the housing market has become far more fragmented. Some cities are cooling while others are still simmering with activity. Now here's where things get interesting. National housing prices have been on a steady upward trend for 5 straight months, and they're showing no signs of slowing down. Just in June alone, prices rose by 0.6%, bringing the total growth over those 5 months to 2.9%. This kind of consistent momentum is what's been fueling the housing affordability crisis in Australia over the past 25 years. And it's continuing today, helped in part by expectations that interest rates will start to come down again, giving more wind to property prices. Meanwhile, the local share market closed the financial year on a relatively high note. Some of the year's top performers included NIP Holdings in the health insurance space, investment giant Macquarie Group, and biotech heavyweight CSL. All three posted strong gains and helped lift the market overall. However, it wasn't all good news. The mining sector took a bit of a hit. The big name mining stocks didn't fare as well and pulled down some of the overall performance, even though other sectors picked up the slack. Over in the US, Wall Street closed Friday on a positive note, which is always an encouraging sign for global markets. But in Asia, shares were a bit more mixed. As of today, some markets edged up while others remained flat or dipped slightly. As for commodities, oil, gold, and copper all took a small step back over the weekend. Nothing too dramatic, just a bit of a pullback. On the other hand, iron ore climbed 1.5%, a good sign for Australia given how important iron ore is to our export economy. And finally, let's check in with the Aussie dollar. It's back at 65.1 to US cents after some recent fluctuations. That number plays a big role for importers, exporters, and anyone keeping an eye on international trade dynamics. So where does that leave us? Well, it's been a year of sharp turns, surprising rallies, and a few cool patches in unexpected places. The key takeaway is this: while the Australian economy continues to navigate global uncertainties, its core financial pillars, real estate and equities, are still standing strong. With interest rates potentially heading downward, investors are going to be watching closely. Will the stock market continue its winning streak? Will housing keep climbing or finally cool off? One thing's for sure: Profit Powerhouse will be here to keep you updated with real, simplified insights that make sense of the numbers and show you where the smart money is moving next. If you found this breakdown helpful, Make sure to hit that like button and subscribe to Profit Powerhouse for weekly updates on stocks, property, and the big shifts in the global economy. Got a question or prediction? Drop it in the comments, we read them all.